Let's talk about the program that is one of the most accommodating for people who've had a challenge. That is the loans that are created by the FHA, or the Federal Housing Administration. FHA loans are designed for people who don't fit into the cookie cutter box of perfect life, perfect credit, money for down payment, all the things that you may think will hold you back. FHA loans typically have a workaround or some kind of opportunity, or are maybe more lenient than other loans, like conventional loans that you hear about through Fannie Mae and Freddie Mac. So let's talk about what some of those areas might be. Well, the number one area that people have challenges in, and they just assume I'm not going to be able to get a loan for a home, is their credit. Credit can be a challenge for a lot of people, and it can be a challenge for a whole lot of reasons. Number one, and one of the biggest ones we see, are medical reasons. Maybe you've had a medical event and you didn't have insurance and you just couldn't afford to pay for your medical bills. Well, you need to know that there's a recent change that is now going to remove medical issues from your credit report. If you have medical collections from hospital stays or doctor's offices, those are no longer going to be present on your credit report. So if those are the only challenge you've had from a credit report standpoint, you don't need to worry about them anymore. You need to pick up the phone, call me or DM me and say, hey, I feel like I'm ready to buy a house. I was waiting because I had these medical challenges, but now I think I'm ready. So from a credit standpoint, a lot of people think medical is just, I know it's going to keep me from getting purchased. So throw that out. Number two within credit is you've had some slow credit. What do I mean by slow credit? Well, you've missed some payments. Maybe life got busy, somebody got sick, you set a bill on your desk, it got bumped off and fell on the floor behind the desk, and now that payment is late. Well, first of all, what does late mean? A late payment to you and me probably means we didn't make it by the due date. But in a credit report, a late payment means you are at least 30 days past the due date. So where you assume your credit may be in trouble because you've missed a payment, if your payment was due on the 1st and you made it on the 5th, it's not going to show as a late payment on your credit report. Most of us nowadays know an idea about what our credit score is because either our bank or our credit cards or somebody is giving us a score. It's not the exact score that we'll use from a mortgage standpoint, but it is a ballpark number that should give you a pretty decent idea of where your credit stands. So if you have had some challenges in the past with credit, there are steps you can take in order to fix that credit or make sure that your credit improves. You should be aware of those steps. In addition to slow payments and in addition to medical collections, you could run into a situation where you are overextended on your credit. Maybe you've borrowed more than what your limits are. And if you have done that, then that can be a challenge to your credit score as well. Again, there are ways you can go about fixing that. So the number one issue that people think will keep them from buying a house is their credit. Now let's talk about how FHA addresses your credit. FHA says, we really want you to have a 620 or better score, but there are some circumstances where you could go all the way down to 580 and we'll still approve you for a home. So if you're thinking credit is keeping you from moving forward, then what you need to do is check that at the door and talk to a professional to say, hey, let's look at my credit. Let's see if it's keeping me from moving forward. And if it's not keeping me from moving forward, let's go forward. If it is, let's come up with a game plan to get it in position where I need, where this is no longer a hurdle. FHA is a great program for that. What's the second thing you might be worried about that would keep you from purchasing a home? Your down payment. A lot of people say, hey, Michael, I don't have any cash. I don't have any money saved up for a down payment. Nobody's going to lend me all the money that I need to buy a house. And the fact of the matter is, that's just not necessarily true. Particularly where FHA loans are combined, there's opportunities for grants, subsidies, or sometimes additional loans that can take you from borrowing the maximum amount that an FHA loan will allow you to borrow from a loan to value standpoint. What percentage of the purchase price can I borrow, which is 96.5%, that means you theoretically think you might need a 3.5% down payment. But there are programs we can pair with that loan so that you don't need any down payment. So credit is often a bump, and 620 is the number, 580 maybe still works. Down payment is often a challenge, and you think you don't have enough. If you have 3.5%, that's really all you need. If you can get a 3.5% gift, that will count as well. But even if you can't, let's have a conversation, because there may be a program out there where you don't even need that 3.5%, particularly with FHA loans. Now, the third issue that you might think is going to keep you from buying a house this year is, well, I have too much debt. My payments are too high. I can't budget a house. That certainly could be an issue, but you won't know until you understand what we call the debt to income ratio. And that debt to income ratio, or DTI, is a formula that we use to calculate a number, and that number has guidelines in each different loan program on how high it can be, and you still qualify for a house. As a general rule, FHA will allow you to go to maybe half of your income for all your monthly debts, including the new house payment. So if you're just thinking, Michael, I don't have the budget, I can't afford it, they're not going to approve me, well, that may be right, but it also may be wrong. If you want to find out, you need to have a conversation with us. So those are the big three things that you may be thinking will keep you from buying a house in 2025. And from an FHA standpoint, there are three different things in those categories that may help you get where you want. Number one, your credit may not have to be as high as you think. Number two, you may not need a down payment at all. And number three, you might be able to afford it in your budget, even though you don't know you can. You've probably got a lot of questions because this is a pretty long video. So if you do, best thing to do is DM me, and we'll be happy to start a conversation and help talk you through each of those three categories, figure out whether 2025 is the year for you to own your own home.